Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Good morning, traders. Good afternoon, traders, wherever you are in the world. Thank you for being here on another show. I've got a loaded day for you guys. I'm actually, some days, I'll be honest, as a content creator, as a trader, think about your own kind of trading journey for a second. Some days you get to the charts and there's just nothing to do. And other days there's a lot to do. Today for me is actually one of those days where there's a lot to do. I got a lot of inventory. I got a lot of, shelves to stock, if you will, as a trader today, because maybe one of the bigger things is, you guys, if you watched yesterday, then you heard me kind of discuss the kind of bull case that I have for the dollar right now, which has been a change. It's been a change to the way things have been going around here. I've been really bearish the dollar for several months, and to be fair, correctly so. Like I've called very well the dollar's move lower in the recent months. Now, where I have fallen short is recently, I've changed my narrative, right? So I was really bearish on the dollar for this entire period of time. We really caught that move pretty well. Where I wasn't so well is I took some losses recently because I thought that this level would hold as resistance. And I don't think what I was thinking there was wrong. I mean, we still are seeing overall, we've seen progress in the inflation department. We saw Fed change from hawkish to dovish. There was some really good kind of moves there that I think were valid. Now, what's happened more recently is we've seen a little bit of a shift in the dollar index. Also, real quick, let me lower my brightness just a bit. Okay. I think that's a little better. Okay, so the point I wanted to make with that is that the dollar index has really shifted. We've had an impressive breakout recently. And my thought process on this is that we've seen consistently stronger US data recently. We had hotter than expected inflation read. We had jobs that were pretty strong. Sure, there was some revisions lower. I mean, the job market by no means is as raging as it was before, but I think a lot of people are assuming just so many rate cuts this year. And I'm kind of more in the camp that we may not see rate cuts in March. And if we don't get rate cuts in March, the dollar index probably, in my view, has room to push higher until that point. Now, I'm a trader. So what that means is that I may need to reevaluate things at that point. I'm not necessarily, I'm bullish all year on the dollar. I'm just saying right now, the economic numbers seem hotter than expected, and they continue to be so. And we're also getting reads from the Edge Finder for dollar bullishness, notably bearish gold, Kiwi dollar, Australian dollar, in favor of the USD. So we're starting to get creeping in here some signals from the Edge Finder that are more bullish USD. And so we're going to ride that until proven otherwise. If I take out the neutrals here and just give us our bullish and bearish readings, what we can see here is that the Edge Finder overall has some pretty interesting signals. We see indices have fallen off here. Really interesting, by the way. What happened? Where are the indices? Actually, that's the first time I'm noticing this. S&P 500 neutral. Seasonality not particular. Okay, let's keep looking here. Okay, sorry. NAS and US 30. The point I'm trying to get at is at one point the indices were up here. And so they're sort of backing off that reading that we were getting from the Edge Finder. So something to think about. Let's see what else we have to talk about today. We do have, of course, we have consumer sentiment coming out in, what is that, about just over 20 minutes. We have U of M, the University of Michigan's consumer sentiment report, which could be interesting to markets for sure. And again, the overall concept here is that the change in price action also can't be ignored, right? This breakout is pretty big. Now, I want to talk about something. There's something that I said I really need to discuss with you guys today, and I've written up a video. I do my videos. I plan my videos on my iPad here. I've got my video of the day planned out, but I'll give you guys a little bit of a sneak preview of what I would like to discuss. It is all about, you ready? Quick presentation. It's all about oil right now. It is all about oil. Okay. Here's the idea. If you don't trade oil, don't tune this out. We can see it in the analytics. Sometimes when people talk about a market that people are less fond of, like silver or oil or yields, what we've seen is that the retention of the views goes down. But before you bail on this concept, let me show you just how important the topic of oil really truly is. If oil rises, okay, then inflation could actually spike. Remember that if everybody has to pay more at the pumps, that goes for everyone, not just you and I at the consumer level, but on the commercial level. Companies have to pay more. Airlines have to spend more money on their, their fuel, which the airlines don't need another reason to sell off right now. They've got plenty. The airlines are in trouble if you haven't been keeping up with stuff. It's been interesting. Possible slowing demand for travel. We've had a rock star last 2 years for travel. Question will be, will that hold up as the economy is slowing a bit? Question though, again, if oil rises, let's talk about just how important the price of oil is. If inflation spikes, that changes everything. Interest rates could stay higher for longer. That's dollar bullish. The indices could drop on higher oil prices. The dollar would likely go up as inflationary pressures could reintroduce, again, that higher for longer concept. And gold could come down. So do me a quick favor. If you're following, if that concept made sense so far, and also, I'm going to ask you two things. Number one, if that concept made sense to you so far, type yes in the chat for me. Just let me know that you're tracking, that we're following here so that I can move on to the other side of things. So we can discuss this. This is really important stuff, guys. I'm telling you, you're not going to get this in a price action course sold for $2,000. That is total nonsense compared to what we are talking about right now. This stuff is not as popular. It doesn't sell 50 courses a day, but it is the really important stuff. Okay. This is really, really important stuff. So please tune in. The next thing I'm going to ask you to do, if this is making sense and you like this type of content, like if you want to get more fundamental education like this, it helps me to do it. I love doing this stuff. Hit that thumbs up button on the stream real quick. I think, what are we at in terms of like count? Can one of the producers let me know, what are we at the like button at the start of this? And then I want to see how much we jump, because it's going to tell me, maybe one of you guys can just comment it in the comments. It's going to tell me if this is something that's resonating. Okay, next thing. If oil falls, thank you guys, by the way, for your feedback. I appreciate it. If oil falls, how important is this to markets? It's so important. And I should add, if oil falls or stays flat at current levels, because oil's been beaten down, okay? If you're watching the gold market, the dollar, or indices, this is so important to you. I bet you didn't know. A lot of you guys didn't know you were oil traders, but this is why people who say, I only look at one chart. Okay, well, yes, but one chart doesn't make the markets move. Many of them talk to each other. Oil is hugely impactful. Until we're fully on, solar panels, oil matters a lot, and energy prices matter a lot. Okay, so check this out. Why would the dollar go up if gas prices go up? Great question, Alan. Thank you for the question. Real quick before we move on to oil falls, why would the dollar go up? Because if the price of oil goes up and all the airlines and shipping companies and trucking companies, they have to pass on those costs to the consumer. So if we're all paying more, it hurts the consumer, but it's more important about the price rises that would have to come with. Inflation could spike and interest rates would be higher for longer to get that inflation under control. Hopefully that makes sense, but that should be the answer to your question. Why would a rise in oil prices be dollar bullish? Again, it would cause price spikes. Price spikes would lead to inflation risk. Inflation risk would lead to interest rates higher for longer, and possibly kind of throw out the idea that in March we're going to get rate cuts. That's the bull case. And I think, we have Frank in the room. We'll bring him in a moment. But Frank and I are kind of over here. We're thinking if oil prices rise, it threatens the whole structure to this thing about, stock markets breaking out to new highs. It threatens it. So let's keep talking. Indices up if oil falls, right? Or stays flat. If oil stays cool, if it doesn't, spike higher, then yeah, inflation could continue to steady, no problem. And we could get meaningfully under that 3% mark year over year on CPI. Interest rates could come sooner and faster. Indices could continue to run. Dollar could come down further, and the gold market could go up. I'm aware of this scenario. As a trader, you have to be. You can't just be aware of the side that you like to hear, right? So if I'm thinking, okay, oil prices could move up, this is more the camp that I'm in. But again, I'll have more on this. I have a full video plan today, but it's very worth watching the oil market. That's the long story short. So hopefully that made sense to you. Hopefully that was helpful to you. I put that chart together here just before the stream. So again, if you appreciate that style of video, the best way to let myself and my team know is to hit that thumbs up button on the stream. We watch that really close just to make sure that we're putting out the best possible free content for traders who want to learn. So make sure to hit that thumbs up button if that resonated with you. Okay, so again, dollar index pushing higher, economic data stronger. I'm going to run through really quick the second part of that presentation on why I kind of lean towards the bullish case for oil. Okay, really, really quick. I'll have a full video on this later where I go in more detail. Geopolitical risks, right? Middle East, Taiwan, China, Ukraine, Russia, those could cause spikes in oil. If the China economy recovers, probably the most important, probably the most potentially driving thing for oil would be China reopening. It's the biggest demander of Brent crude oil. So something to think about there. If the US economy stays strong, which we've been seeing, that could continue to be a bull case for oil. And if the European area continues to kind of strengthen, if it comes back, we've seen kind of impressive numbers more recently. We saw higher than expected inflation. And then finally, if OPEC organizes, specifically Saudi Arabia, if they kind of decide, hey, we want oil prices to be higher, we need to sell them at higher prices. All of these things could be huge bull cases for oil. On the bear case, we have possibly, if geopolitical stuff cools, if we see the Middle East calm down meaningfully in the coming months, that could be a bear case, right? There's a little bit of risk premium built into oil right now. People are a little bit concerned about what's going on in the world. If that cools off, that probably drives oil prices lower. If the global economy slow more, right, more than expected, that could be, which again, the reason the dollar's trading up is because the US has been a little hotter than expected. We did get some cool numbers out of China, but watch that really close. And if OPEC can't coordinate effectively, they've had a little bit of issues with that recently. So that is what I'm pointing out is be very careful on the energy market, those things. Okay, so I know kind of a fundamental day, but it is Fundamental Friday after all. I'm going to bring in just a moment, we're going to bring in Frank and Kenzo to discuss a little bit about this viewpoint, about this topic, about the dollar's recent strength, and whether or not it's time to fade the dollar or move higher. But again, we'll be doing more price action in just a moment. We're going to take a quick break. Thank our sponsors who make this show possible, support the content for you guys to get it for free. So tune in, check this out real quick, and we'll be back with Frank and Kenzo. Check it out.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys. So in the opening hours of the New York session here today, the S&P 500 tried to break the highs. And to help me out with this, I just went through that oil presentation. We've got two of the best people in the possible stream history to help us out with this highly fundamental situation. I got Frank above me. I got Kenzo below me. What's going on, guys? Welcome to the stream.
Hey, how's it going? Hey, Kenzo.
Hey, how are you, man? I hope you are all doing great.
Doing well, thanks.
Yeah. So guys, I don't know, Kenzo, you kind of joined. I think Frank heard most of my presentation about oil there just a little bit. I know, Frank, you're actually you have a long trade on oil right now, right?
I do, yes.
So what do you think about it? We have the S&P 500 testing the highs, and Kenzo, I'll be coming to you in just a second for the same stuff, but we see oil testing the upper limits of this kind of range that it's been in. And the question is, if this breaks out, it really changes the landscape with that idea of March rate cuts. What do you think, Frank?
Yeah, no, I'm kind of with you on that. The reason why I got in oil was for the few recent factors in the past week or so was higher CPI, and then this week we had higher retail sales. So suggesting that prices are going up, and keep in mind that core stayed the same, but that is excluding food and energy. So we got the benchmark year over year CPI came up higher than expected, which is kind of coincides with higher oil prices when we see higher inflation month over month or year over year. And more retail sales is also indicative of higher inflation too. So I was looking at oil's chart because I had been ignoring it for some time and noticed that this was kind of like could be a potential reversal here. There's just this wedge pattern on the daily chart. I didn't pick it up at the lows of the wedge pattern. I got it yesterday somewhere in this candle. I don't know exactly where because I bought what's it called? I bought UCO, which is on WeBull. It tracks oil prices, but I'm using US oil to kind of reflect my trade. Right. At least on MetaTrader. But yeah, so what I'm hoping for is a break in this wedge pattern and a potential start to this reversal, because right now it could test this level and come all the way back down to the bottom of the wedge or even lower. So we'll have to keep an eye on that. But I know COT is buying it. I know there's also tensions in Taiwan, with China, and people are afraid that's going to be another sort of breakout for war or some kind of military conflict.
Right.
So
definitely some room for some geopolitics there. And Frank, you mentioned the COT reports, and Kenzo, I'm going to come to you in just a moment. I do want to just show guys, for those of you guys who are with us live, the COT report, it comes out later today. And if you do not have access to the Edge Finder, we've got some nice discounts going on. If you shoot us a direct message on our website, we're going to drop the link here in the chat right now. If you chat with us directly, you can actually get a copy of the Edge Finder for a super discounted rate. Here's the link. Click this link, send us a direct message. You can speak with someone on our team to get access to the COT report directly when it comes out here today using our proprietary software, which helps you visualize it a lot easier. You can basically track what institutional money is doing week over week. So Kenzo, I want to come to you about this because what we've been seeing on the dollar index is we've been seeing strength, right? We've seen, I'm sorry, that's the wrong chart. The dollar index, we've been seeing strength. We've been seeing kind of a change in price action. We saw come back to resistance and break that level. And a lot of this has been just stronger than expected economic figures. We saw retail sales hotter than expected. CPI was hotter than expected. So I wonder, Kenzo, what do you think about this recent move in the dollar? And do you think it's just kind of a bigger, longer term selling opportunity, or do you think there's more room to the upside for the dollar? What do you think?
Yeah, currently we have some like mixed economic news, but mostly on the US side, all of them they were positive. As you mentioned, CPI. We also have NFP, and the other ones they were both on positive side. But I think the bigger move came after. I think it's Christopher, a governor of Federal Reserve and stuff like that. I think they were interviewing him a few days ago. So he mentioned that they are going to cut the rates, but not as rapidly as seen before, or as they were expecting. So which means it's actually bearish because they will still cut the rates, but not as fast as the way we thought. I don't really see it pushing up that much because they did not really say they're not going to cut the rates. It's just that they're gonna take time. Maybe let's say later, maybe during the year, which is something that I don't think is bad. But the market, it's all about emotions. I think people reacted to that. But when we go on the other pairs, like maybe let's say gold, Nasdaq, and the other ones, they did react to that, but later on they reversed. So I think even if the market might try to push up, we might end up seeing another continuation of a sell. But for now, yes, the market broke out of that downtrend. Maybe the market will end up pushing up. I might be wrong about that, but that move came after that statement that they're still going to cut the rates, but not as fast as we think. So maybe they might cut around November, which is very late. But what I like is they're not going to increase any rates. They're going to pause, which is not really bad. So I think the market is just reacting with the emotions. It's not really a bigger move, according to what I see.
Yeah, no, Kenzo, thank you for pointing that out. And again, another key component is, Fed speak, right? Anytime you get insights or forecasts or ideas or even opinions from, these ladies and gentlemen that are on our Fed, if you get sentiment that is like, hey, I don't think we need to be rate cutting so soon, there is an argument right now, and I think it's a growing argument that the market got a little bit too excited about rate cuts. And I'm saying this from a perspective of I'm still overall a stock market bull this year. But I think it's also okay to recognize that, maybe that idea of a March rate cut is a little bit excited. I think Frank and I were looking at it yesterday. The Fed Watch tool has it at a 60% chance that they will cut rates in March. And so being in the minority right now, thinking that maybe we don't, right? The 40%, there's some pros and cons. Obviously, there's a slight lean towards cuts could be coming. At least that's what the market thinks. But if you're in that 40% and rate cuts do not come, as you're talking about, Kenzo, the idea that, we're not ready to cut rates and that commentary could lead to a pretty big sell-off on the S&P 500. I imagine that if you don't get rate cuts, we easily could see a push down to, 4680, things like that. So it will be really interesting to watch that going forward. So Frank, I got to ask you about the dollar index too, because we talked a little bit about oil. Do you think that all of this economic data Obviously, if they don't cut rates, it could strengthen the dollar. But is that something that you think could be a couple months of upside for the dollar? Do you think it could be short-lived? What do you think about the dollar index?
It's hard. Here's what I will say though, and it's regarding the Fed. That anticipation around rate cuts for March, that was really driving prices in the last month or two. But if you just like look at it logically, why would we cut? What is the reason for cutting? The goal is 2% inflation, and as long as inflation is rising, why would we cut? So we're seeing we're off from our target, and we're actually moving slightly away from it as well. So where was that idea of cutting rates in March coming from? Even when the Fed never talked about cutting rates that early, they entertained the idea in that last FOMC, saying, "Yeah, we at some point we can be open to rate cuts," which is good news. But the fact that the market took that and spun it in their own way to say, okay, maybe we'll see it in March, it still doesn't make any sense. So I'm going to, I think the sentiment around the dollar and the S&P or the stock market is the same for me, at least. The dollar isn't very strong because, in my opinion, fundamentally, we will likely not see any more hikes. The journey is kind of over for the rate hike path. But in the meantime, we're probably just going to see some strength. I don't know how far it's going to go to. I can't imagine the dollar coming all the way back to October highs of last year. But I think this is sort of, I guess, the aftermath of the disappointment. Everyone's expectations are kind of, they're not solid anymore. The March rate cuts, for some reason, were very anticipated, and now that it's kind of mixed 60-40, which is still kind of crazy. 60% still think there's going to be a cut. We have never said that there was going to be a cut or thought that early this year. So I don't know. I don't see dollar as very strong, but I can understand why it's strengthening right now, and why it seems like stocks have limited upside from here.
Well, Frank, I wanted to pull up a chart that you just mentioned something, and I love the way you break that down, because here's that inflation that you mentioned. And Kenzo, I'm going to ask you about the upcoming CPI in just a moment, just how important it is. Because look at this. So to Frank's point, we're not at the 2% inflation. Now, of course, Jerome Powell and Fed officials, they know that there is such thing as momentum with inflation. If you see stuff heading in the right direction, it could be continuing in that flow, right? We had several months in a row where we just had falling inflation. The market absolutely loved that. But here's the thing. To Frank's point, what we've seen in recent times is not the same level of sort of persistence to the downside. This is inflation. This is our CPI reading. This is headline year-over-year inflation, month to month. And what we can see is that we fell real well, but now we've stagnated. And in the most recent CPI report, we actually ticked higher. So we're not seeing just a smooth set down move. I mean, it's been rocky, and it's actually kind of, if you just look at it, it's sort of flattened out a little bit here. And to Frank's point, why rate cut if we're not seeing the disinflation trend help out? Now, of course, you could point and say, well, that's one instance where we had higher inflation than what was expected, and we didn't stay in line with our downtrend. But Kenzo, we have CPI coming out, of course, next month. 15, 20 days from now or so. How important is that next CPI figure ahead of the March decision? I mean, we get January's inflation data, obviously, in February. How important is that going into the March meeting?
Yeah, I think it's very important. Remember, my argument, my actually will be November, December, or let's say December last month. Mostly it's festive season, so it means people they will be spending more. At
Sure.
the end of the day, that will push the prices to go up, or even retailers they will increase the rates because they know that it's time for people to buy gifts, all those things. People get bonuses, so automatically, mostly or most of the time, inflation is gonna go up or CPI is gonna go up, retail sales is gonna go up, and or consumer spending is gonna go up. But mostly when we go on January, like this month, next month we're gonna see a different story because now it's January, we no longer have that cash, so it means inflation automatically is gonna go even lower. But for this month, I don't really know because we are still on December. So, sorry. For next month, because now we no longer have CPI. For next month is gonna be much better because now it's January. That spending is gonna go lower. So I'm expecting them to be positive because the numbers they will be going lower. I think when they say we're gonna refer maybe 2-3 news or figures from the economic news, I don't think they pointing only one economic event. So, like for now on the festive season, I don't think they're gonna count that because some people they've been saving and stuff like that. So inflation automatically, if you check every December, inflation mostly pushes up. So
That's a good point.
around January, things start to go lower, and I think that will happen maybe also next month. But I'm really confused because I think we're gonna have a FOMC around the 31st before we have a CPI next month. I think it's Feb, so that might be confusing. But we will see what will happen.
Yeah, that's a really good point about the the spending habits, the slightly higher pricing due to consumers spending a lot of money during the holidays there. And yeah, I'm checking the calendar here now as we speak, just to make sure. This is January, so let's go ahead and go into, just so we're on the same page with. So we have the press conference on the 31st, and you said Fed funds rate. Yeah. So we do get the decision before the next CPI. I didn't realize that. And that's actually really, really an important point to make. So the Fed is going to make a decision in January. But of course, the big one is the market's expecting them to actually make a move on interest rates in March. So it'll be really interesting to see what they say. And then, of course, we have CPI coming out in February, which I do think will be really important. If we do see that concept of a meaningful drop in inflation, as you're talking about, Kenzo, if January ends up being, if we start getting into the twos, I'll probably fold on this idea. But if we do get any sort of strength on inflation or higher than expected, it will be very, very interesting to see what happens to markets. But I want to thank both you guys for coming on the show. Thank you for sharing. I know it's very, very fundamental here today on the show, but I think really good points made by both of you. So thank you for joining me on the show. And as we end out with Kenzo, I do want to say his YouTube channel is right here. If you do not already follow Extra Hot Forex on YouTube, it just got dropped here in the chat for you guys to go follow him and to keep up with all of his latest videos and content. So Kenzo, thank you very much for coming on the show.
Thank you very much, man.
See you, Kenzo. Same thing, Frank. Thanks for the comments. Those were awesome. And we'll have you back on the next one.
Sounds good. Thank you.
All right. See ya. Yeah, guys, really good points by both Frank and Kenzo. That was really, really high quality stuff. I do want to say, if you enjoy the show, if you enjoy what we do here as a, obviously these are free videos. These are free streams that we put out to try and help traders. That is kind of our service to the community. Make sure to hit that thumbs up button and subscribe. And I do also want to say, if you want to use the software that we are using to take on the markets, in my opinion, 2024, if you're not using software to help you trade the markets, I don't know what you're doing. You got to be using tools to actually interpret what you're seeing going on in the world. There's no point in just reading articles all day when you could just have software that assists you, pulls in data. And again, just a reminder, at the end of today, we get the COT reports. We will see the latest money moves of what institutional money has been up to this week. If you do not have access to the Edge Finder, we are doing discounted prices. If you send us a direct message right now using that link, stream viewers get an extra discount just by shooting us a direct message. So message us there, chat with a team member. We have several people on deck who can assist you with getting a copy, answering any questions you have about the products, giving you the best discounts, that sort of thing. So make sure, send a direct message there if you have any interest in learning more about the product. Next thing I will say, and before we end out, is that if you are interested in our software, make sure you can also apply for a trial. If you'd like to apply for a trial, we'll drop the link to that as well. You can try out our software for a month. It is an option that we now offer, and you can find out more information just by clicking this link, applying for a trial, and then again, someone from our team will reach out with your trial so that you can get set up right there. So there you go. All right, guys, thank you very much for tuning into the show. I hope it was helpful to you, and have a great rest of your day.
All right, thanks again for watching today's show. Our goal at A1 Trading is to continue to bring you free value through our daily videos and articles, keeping you up to date with the latest market coverage. If you like our content, make sure to subscribe for more. And hey, I'm going to need you to get out of here. We got some heavy equipment on its way, and you're kind of in the way, so you need to move along. Frankie, that hard hat needs to be on your head.